Hello, everyone. Thank you so much for joining us today. And please allow me a couple minutes while I figure this out. We have done multiple webinars in the past, but this is one of a kind that we are doing using a different software here. So just want to make sure I got all my technology and everything figured out. And thank you so much for joining us today. Taruna, could you just do me a favor if you can check I did the right thing with the live on Facebook, because I'm not sure if it went through correctly. Perfect, thank you. Thank you everyone for joining us today again. And my name is Minal, for those of you who don't know me. And I might be reaching out to Taruna a couple of times during this webinar. She is my elder sister as well as my business partner. And she is supporting me on the back end so that everything runs smoothly. So let's get started with our webinar, COVID-19 Wartime Response Plan for Hotels and the Business Owners. Initially, the thought was that we will be doing this just for the hoteliers. But then I was like, why just hotels? There are so many business owners who does invest a lot of money in the real estate properties, as well as so many other industries are suffering during this time as well. So we just decided to open up this channel for everyone. Just some housekeeping, before we get started, and some disclaimer. This session is an educational in nature and should not be construed as a tax advice. And it may not really reflect changes in the federal or state laws subsequent to the presentation date. We try our best to make sure we are up to date, as well as our presentation slides are up to date. But if there was anything that was proposed or changed yesterday or last night, I would say, I might not have updated in my presentation slides. So before taking any action based on this information, we strongly encourage you to consult with professional accounting advisor about your specific situation. The information provided is based on the facts that were available at the time of publication and are subject to change. KB Tax Advisor CPAs makes no warranties, express or limited, implied, or representations as to the accuracy, completeness, or timeliness of the information provided. KB Tax Advisors cannot be held liable for any claims or damages that result from the reliance on this information. I think that was a really long disclaimer. This session is recorded and may be rebroadcasted. So please do not share any information that could be private or which you don't want to show to everyone. Now, as I was saying, every client situation is different and unique. Some of the things that I present in the webinar might or might not be eligible to you, but I would say reach out to the professional accountant and get the help from the best in the industry. We will be covering some live Q&A. If you look on the bottom of your webinar, whether you're accessing through the phone or through the tablet or the computer, there is an option for Q&A. If you are posting any question for us to address at the end of the webinar, make sure to put it in the Q&A, not in the chat box. If you are expecting answers from us, please put it in the Q&A. I will be launching a couple polls as we move along, just to, just for fun. So I would appreciate your response on that. We are always collecting some data to do some research, as well as many articles that I write. The KB team, we are the full service accounting firm, and we provide the year-round advisory services. And we are tax savings experts who specializes in hospitality industries, liquor stores, real estate industry, small businesses, as well as professional service providers, to help them grow their business, increase their profits, and save money on taxes legally. I am a CPA as well as a certified tax coach. Same way, Taruna is a CPA as well as certified tax coach. We both are a certified tax coach and extensively trained in identifying loopholes, deductions, and credits, which often gets missed out by an ordinary accountant. There are only 700 certified tax coaches throughout the US, and 2 of them are with the KB tax team. And there are only 2 in Pennsylvania, and one of them is here, Taruna is in New Jersey, but that gives us some leverage. So the agenda for today, we are going to review the Families First Coronavirus Response Act, review for liability minimization, CARES Act provisions review for liability minimization, PPP loan comparison with PPP Flexibility Act changes. So what has changed from PPP loan? That was CARES Act, and the PPP loan was enacted in March 2020 versus the things that they changed a couple of weeks ago. Main Street Lending Program, this might be really interesting for many business owners, especially the ones who are looking for more funds. The process businesses can use to save somewhere from $10,000 to $200,000 in taxes in 2020. And what separates hotel or business owners that overpay more taxes from those that saves the most? And if we have some time after we are done with this, we will cover some live Q&A. I just want you guys to let you know, there is some construction work going on around here, so you might hear banging and all, and I'm really sorry for the disturbance. So let's get started with the Families First Coronavirus Response Act. It was introduced on March 14, 2020. Well, I'm not going to go into much of details, who wrote it and what was the main purpose. And I believe at this point, majority of you know it, but if you do want me to go into all the details, probably post it on the chat box or comments, and we will come out with the next session on that. There are 3 credits available under the FFCRA. One of them is the sick leave credit, family leave credit, sick leave credit of 2 weeks, family leave credit of 10 weeks, and company paid health insurance cost credit. Again, this is just for the people who are on the W-2 wages. Wages that are taxable for the employees and are not deductible for the company. And it can be used with the PPP or EIDL loans, but cannot overlap the funds. So you can use the sick leave as well as the family leave and health insurance cost credit with the PPP and EIDL loans, but it cannot overlap, which means if you're using PPP funds for the payroll for this particular week, you cannot use the sick leave as well as family leave for the same week. It has to be different period. There are many exceptions and other rules that apply, and if you want more information on this, I can definitely come up with more information on the next webinar. The CARES Act. So as a result of this disaster, this pandemic, Treasury and the government did really, good things, which they have never done in years in the history. The first one was the Families First Coronavirus Act. The second one is the CARES Act. It was introduced on March 27, 2020. At that time, it was so early. People were in shock with the lockdown and everything. And no one had idea at that time that it's going to be this worst. It was CARES Act introduced the following programs, which includes the PPP, which I assume majority of you are aware of, the EIDL loan grants. Most of you, I believe, have taken advantage of the EIDL loan grants, and if you have not, do reach out to us on that. We are helping clients whose EIDL loan has been declined, or you think you are eligible for $150,000 of EIDL loan, but you received substantially less. Over the last few weeks, I have spoken with so many hotel as well as other business owners who received EIDL loan of only maybe $3,000, $3,400, or maybe not at all. And they have been denied, saying your business did not suffer. But if you are in the hotel industry, let me just tell you, I worked with many liquor stores. All the liquor stores have received $150,000 full EIDL loan with whom I have worked. I would say majority of them, 99.99%, not 100%. And there are other reasons behind that. But if you have received a letter saying your business did not suffer due to the pandemic, or a disaster is not substantiated, you need to appeal that. You cannot sit and just assume that you do not qualify. The people who are processing this EIDL loan with the SBA, they are just a loan officer who does not have the knowledge of the business industry, especially the hotel industry or real estate industry. And hence, I would not take their wording that your industry did not suffer. I have been appealing for the EIDL loan for many business owners, and we have been somewhat successful. I'm saying somewhat because some of those applications are still in the process and not yet, we are waiting to hear back from the SBA. But I'm pretty positive we would see some good results on that. The unemployment funds, federal unemployment of $600 per week until July 31st. This might get extended, and if it does get extended, I mean, there are many positive things as well as negative, because if people are receiving free money, they don't want to work. So that, makes economy suffer even more than doing good. $1,200 stimulus per person plus $500 per child. There are some limitations on income here. And the retirement fund changes, waived 10% early withdrawal penalty, required minimum distribution. If you are someone who is 72 and above and you were required to have minimum distributions for the year, that has been suspended for 2020. And if you have a 401k plan or a retirement account where you are allowed to borrow a money, against that plan, you can take a loan off up to $100,000 and repay it to, in next 3 years. There are more changes coming in towards a retirement account, in next few weeks. Continuing the CARES Act here, the employee retention credit, deferral of payroll taxes until 2021, 2022. Well, usually I do not recommend deferring the payroll taxes. But if you are a business owner who is suffering a lot and who received the PPP loan substantially less, received the EIDL loan, maybe that was not enough for your business, or you need more fund and you have no way of getting anything, you can utilize this particular benefit available here, deferral of payroll taxes. The only reason I do not recommend it, because see, if you can afford to pay taxes, I would say by all means go and pay it right now. After things get a little bit better, you don't want to accumulate huge debt with the payroll tax liability and then not being able to pay in 2021 or 2022. And payroll taxes is something does affect your credit score as well at the same time. So this is something I do not really recommend, but if it is something your business really needs it, I would look into all the other options, and once all my other options are finished, I would go and tap onto this option. Net operating loss carryback of up to 5 years with an extension on the refund statute of limitations from 1045. And so if your business had a net operating loss in 2018, when the Tax Cuts and Jobs Act was enacted, they said, okay, you cannot carry back your losses. But as a result of the disaster, they made the changes, and as a result of a change, you can go back and amend your 2018 to carry back your losses to the prior years. So the way it would work, if you have in 2018 a tax year, if you had a net operating loss, say for example $100,000, but in 2016, 2017, 2016 and 2015, your business had profit. You can make an election, go back to last 2 years, 3 years, or 5 years, claim those losses, which will create a refund. And if any losses remains after those, last 3 years or 2 years or 5 years, you can carry it forward indefinitely. But the requirement is you have to carry it back. Now the requirement for 2018 net operating loss carryback is expiring on June 30th. So if you do need any help with that, let us know. We can definitely help you on that. Charitable deduction without itemizing. Qualified property improvement deduction for 2018 and 2019 as a deduction that can be bonus depreciation. This was one of the big thing that was changed as a result of Tax Cuts and Job Act, where you did the intention when the Tax Cuts and Job Act was drafted that you can take a bonus depreciation on your qualified property improvement, which is your leasehold property improvements for the commercial property. But while drafting the law, they made an error. And as a result of an error, that deduction was lost. And now they just reintroduced that deduction. And as a result, if you did any leasehold property improvements in 2018 or 2019, and you had elected 15 years of depreciation, you have a really good benefit there. By selecting bonus depreciation, it would give you a refund in your hands right now. The Main Street Lending Program for middle-sized businesses. Now, the middle-sized businesses, when they say middle-sized businesses, they mean the Treasury and the federal government means anyone with less than 15,000 employees, okay? Which might be, in my language as well as your language, could be big businesses. But this is a really interesting program, which I'm going to cover in next few slides. Credit protection for COVID-19 forbearances. So if you have a loan or if you have a tenant, in case if you own a real estate property, they cannot afford to pay you rent and you contacted bank, or one or the other reason you're contacting bank to put off your mortgage for 3 months or 6 months. If you have not done, I think this is one of the good things, you should contact your bank. So if you're asking your bank that you cannot afford to pay the rent, for 3 months or 6 months, and can you please push it off to the, by that many months? There is a rule per the CARES Act that by pushing those mortgage payments, your credit history will not be impacted. Under the normal situation, if you don't pay your mortgage payment in time, your credit does get impacted. But here with the CARES Act, it will not be impacted. And we have helped many clients where we have negotiated with the bank that, they give you either reduced payment or, they move those payment back to the end of the loan without charging any additional interest on it. If you don't ask for it, banks don't give you. So I don't want only you to push forward your mortgage installments, but at the same time, I would request with the bank that there is no extra interest accruing to those installments. No evictions if the loans on the property is through a government entity, and 10 billion loan to the USPS. Little known special rules. Employers can pay up to $5,250 in student loans for an employee, and it will not be included into the income for the employee. As per the Section 127 plan, and this is one of the good benefit available under the CARES Act. This will not only help you to pay off the student loan, at the same time will give you some deductions for the business as well. At the same time, IRS section code 139 lets the employer make qualified disaster relief payments. This section is very powerful, section 139. And this can only be used during the time when there is a disaster. And if you remember, few years back, during 9/11, there was a disaster declared in New York. And as a result, any businesses which suffered and the employees that suffered, this act was enacted that time that if your business suffered and you're paying your employee just to, because they cannot come to the work for one or the other reason, or they need some help with the funeral or treatment or any kind of cost, and you as an employer, you feel like you want to pay some money to that employee, it is deductible to you as an employer, but then the employee does not have to pay any taxes on it. This income does not have to be reported on their W-2. But this is one of the really good benefit, but this needs to be implemented in a right way so that you're not inviting the auditors here. And there is a right way of doing it, have a proper agreement in place and determine what is reasonable and necessary and how much you can pay to the employees. But this is one of the very powerful strategy to pay your employees who are suffering through the coronavirus or have extra expenses because their kids are home, or because schools are being closed, or have any funeral cost, you as an employer can pay to those employees, and employees don't have to report in their taxes, but you get the deduction. And if you are an S corporation owner, you can pay yourself too, by the way. So because you are considered as an employee too, right? Whether you are an S corp owner or C corp owner, but you as an employer can pay yourself too. But it has to be reasonable and necessary expense for the employee and deducted by the employer. That is not considered income for the employee. If you need any help in implementing Section 139 plan, do reach out to us. We are very well versed with the Section 139, and we can help you put it in place. Expansion of the employee retention credit. So the HEROES Act. The HEROES Act is a new act which has not yet been passed. It just keeps moving back and forth between Senate and House, and they're making so many changes in there. But some of the pieces that have been passed already, I just want to go over briefly and what's upcoming in future. So expansion, if it gets passed, it might have some components related to the expansion of the employee retention credit, business interruption credit. Self-employed individuals get a tax credit of up to 90% of their income. PPP changes, which has already been passed, if you know, Paycheck Protection Program Flexibility Act that was passed June 17, 2020. And in the next few slides, I'm going to go over what's the difference between the actual PPP Act, sorry, not the PPP Act, but the actual PPP program as enacted under the CARES Act and as a result of PPP Flexibility Act. But under the PPP-FA, we have an extension to request a loan until June 30th, 2020. Initially, they said you can apply for PPP until December 31st, but now they came back, Treasury came back and said, no, we are just going to cut it off, that you have only time up to June 30th, 2020 to apply for the PPP loan. Now, I hope by now all of you have received a PPP loan. If you have not received the PPP loan and need any help with that, we do have the lender with whom we are working. In fact, yesterday and today, between yesterday and today, we got at least 7 to 8 PPP loan applications approved, start to finish within the matter of 3 to 4 hours. So if you're someone who could not get the PPP loan before, do let us know. Our lender, we are really blessed to have a really nice lending relationship, and they are new customers as well. And there is no more 75-25 rule on the PPP. The expansion of the Main Street Lending Program and expansion of the unemployment benefits of $600 per week. So I'm just going to launch a poll, which I should have launched ahead of time. And while you guys respond to the poll, I'm going to go and look at the question and answer. So did your accountant help you with the disaster relief funding, PPP or EIDL? You can you can select the multiple options. I know many accountants were not helping on it. So I'm just really curious. I have a question from Stephen. I've already received the EIDL for one of my property, but I only got $6,600. I already accepted it. So listening to you, do I have to short to appeal and get more? Well, you can blame me, yes, listening to me. My response to you would be, Steven, you can absolutely appeal it. I would ask you a couple questions on that, reach out to me on that, or one of my team member, what was your revenue? What was your debt? What is your cost of goods sold? Do you have a good credit score? Because those are the criteria, does play some role in it as well. If your credit score is more than 600 and you have a good history of the revenue and everything, then you should have qualified for the higher loan. And looks like you are in a hotel industry. If you are in a hotel industry, my understanding is you should have qualified for the higher loan. So reach out to me. I can, go over, a couple questions. And if you are a right candidate, you can go and appeal the process. Okay, so I see a lot of accountants were not helping. It's like you got a coronavirus and you call your doctor. Doctor, I got coronavirus. What do I do? And doctor says, sorry, I'm so busy. I cannot help you. I cannot treat you. Like this is, really painful that the people, the accountants who really understand the PPP loan and EIDL and the businesses that need this help, they were just left to figure it out themselves. And I'm going to give this poll a couple more minutes, and then I will end the poll and share the results with you guys. But as of right now, I see more people clicking on I applied myself. By the way, all your responses are kept anonymous. So we don't get to see your name or anything. So you can just respond free mind. So PPP loan comparison side by side. CARES Act old rule, PPFA new rule. Covered period was 8 weeks, which got changed to 24 weeks. Any loan received after June 5th has to go with the 24 weeks. If you receive the PPP loan before June 5th, you have the option to go with the 8 weeks. If you ask me, my personal opinion, if you can spend within 8 weeks, I would go with the 8 weeks. And here's my rationale behind it. Because if you are selecting a 24-week, you are required to maintain a full-time employee ratio and all other things for the whole 24 weeks. For, I don't know about future, what's coming in, but I do know, and what I had for 8 weeks. So I will closely monitor it. And if you can exhaust all the money in 8 weeks, just go for it. But again, not all the employers might be eligible for 8 weeks. It changes case by case basis. Covered period, well, the CARES Act says 8 weeks, 24 weeks, but don't get confused. When they say weeks, they don't really mean weeks. They really mean days. So it doesn't matter whether you received the loan in between the week, first of the week, last of the week. They really mean days, 56 days, that's it. With the 24 weeks, 168 days. Under the old rule, there was you had to spend 75% of money on the payroll, which has changed to 60% of the PPP money has to be spent on the payroll. Rest 40% can be spent on rent, utility, and the other expenses. When we say the utility, it includes your telephone, your gas, your electric, water, sewer, all of those expenses. If you have any business lease, like if if you're leasing a copier machine or any equipments in the business, those does qualify as well as your rent. If you're not paying any rent, then the mortgage interest, only interest portion. The payroll covered period. First payroll, after the receipt of funds, again, it remains the same. The payroll covered period is if you say you received the PPP loan money in your bank account today, and your payroll, is coming, you have tomorrow the payday, which is for the payroll hours worked by the employee in prior 2 weeks. You cannot use the PPP loan money for that particular payroll. Your pay period starting after the time money came into your bank account, that is considered as your covered payroll period. So many people are confused on it, and I'm afraid that if it is not handled correctly, you might lose out on the forgiveness. In either case, you have to apply for the forgiveness before 31st of December, which puts lots of pressure on the accountants, on the business owners, as well as on the bank loan officers. Here's the reason. It's a Christmas time. People want to celebrate time with their family. Whether you elect 8-week period, 24-week period, doesn't matter. You have to apply for the PPP forgiveness before 31st December. In some cases, it might be possible that you receive the PPP money ahead of time, very late, and you might be still in your 24th week around December 31st, but you're still required to apply before 31st December. Unforgiven amount, that can be paid back. Under the old rule, it was 2 years. So whoever got the PPP loan before June 5th, you can either elect 2 years or 5 years. the new people who received the PPP loan after June 5th, the only option is 5th year. I'm going to end the poll results here, and I'm going to share the results if anyone is curious to see. It says majority of the people, 50% of the people are saying they applied it themselves. I see here 11% of the people are still saying, I have yet to apply for or declined received limited funds. You still have time, and it is first come, first serve basis. Reach out to your any professional accountant who is well versed in this area, or reach out to us, and we can definitely help you on this. Because your business might not be suffering right now, but there is no guarantee that it would not suffer over the next few months. So I would be very cautious on that. And right now this help is available through the Treasury as well as the government. In next few months, even they might have exhausted all their money, and when you need some more money, it might not be really available. So I would not really wait. I will apply for it right now. Now, if you think that your business does not need EIDL money, you can pay it back. There is no prepayment penalty, but just get it right now and keep it. Moving on to the next slide. Side-by-side comparison of the Families First Coronavirus Act, PPP loan, EIDL, Employee Retention Credit, Payroll Tax Deferment, Main Street Lending Program, and additional relief programs. This is the available aid per company. You can elect 2 weeks of payroll with the FFCRA, payroll cost of 2.5 times with the PPP, which majority of you know, max EIDL loan, $150,000, employee retention credit of $5,000 per employee. Now, if you're doing the employee retention credit, you can get either this or PPP. If you are one of the person who was rejected for the PPP for one or the other reason, you cannot qualify for PPP. I would say take advantage of the employee retention credit, because this is also one of the very good benefit with very much less headache than the PPP. Payroll tax deferment, employer taxes for 2 years are deferred. I do not really recommend it. Main Street Lending Program, which is a middle-sized, and it's not yet started. Some banks, they were going to launch on 22nd, but I don't think they have, I have not heard of any lender who has launched this program yet. Additional relief programs, it depends on states. Many states are providing some grants and all. So this is available with the anyone who has the payroll. PPP loan is available to sole proprietor, independent contractor, any company with less than 500 employees. Same with the EIDL. If you want, I can send you the screenshot of this so you can refer to it at your own time rather than going into too much of these details. I want to make sure I have enough of time to cover some live Q&A as well. The Main Street Loan Facility Comparison Chart. The Main Street is a new loan facility. And the terms of these loans are something like this. Now, this program is enacted by the Federal Reserve. It's coming, it's funded with the Federal Reserve. And, there is some contribution with Treasury at this point. I don't remember how much contribution was by Federal Reserve and Treasury. So, majority of this program was funded by Federal Reserve and the, little bit contribution by Treasury. The Main Street program, under this, you can get $250,000 minimum loan, or maximum it could be $35 million, or 4 times of your 2019 adjusted earnings before interest, tax, depreciation, and amortization. So it's EBITDA, that's how they pronounce it. Earnings before interest, tax, depreciation, and amortization. There are 3 different programs here. Under Main Street Priority Loan Facility, you can get minimum of $250,000 loan, or maximum lesser of $50 million, or 6 times of your earnings before interest, tax, depreciation, and amortization. And here, this one, Main Street Expanded Loan Facility, you can either get a $10 minimum, or maximum up to $300 million, or 35% of your outstanding and undrawn available debt. or 6 times your 2019 adjusted EBITDA. This gives you more reason to get your 2019 taxes done, because if you are someone who is looking for more funds, this is your best chance. And the loan terms are 5-year terms with the payment deferred for 2 years. First year, no interest at all. Interest does not accrue. No interest and principal, no interest and principal for the first year. Second year, interest would accrue, but no principal payment. So no payment at all for the first 2 years. In the third year, you would pay principal of 15%. Fourth year, you pay 15%. And the fifth year, there will be a balloon payment of 70%. And that is the only thing I don't like. But if you look at, getting to use this money for first 2 years, and if you have the opportunity available or your business is really suffering, this could be a huge benefit. The interest payments are deferred for 1 year, and the interest rate is based on the LIBOR rate, which changes on a daily basis. So it's adjustable rate of LIBOR 1 or 3 month plus 300 basis points, which is pretty much same for all of them. And then fees. Borrower pays 100 basis points of the principal amount to the lender as an origination fees, which is, I believe, 1% of your total loan. You will be paying it to the lender for the borrowing fees. And lender may require the borrower to pay an additional 100 basis points as a transaction fee. And this is, again, determined by each lender. They might have their own terms. Main Street Priority Loan Facility is same as Main Street New Loan Facility as far as fees comes. In case of Main Street Expanded Facility, borrower pays 75% basis points of the increased principal amount to the lender as an origination fee, and lender may require the borrower to pay an additional 75 basis points as a transaction fee. No prepayment penalty on any one of them. This loan is not forgivable. And whether you receive the PPP, EIDL, or any other government assistance, this loan is still available to you. And some important facts about the Main Street loan programs are, the loans are limited to the businesses that have either 15,000 or fewer employees, or 2019 revenues of $5 billion or less. This is what government says, middle-sized businesses. 15,000 employees or less, medium-sized businesses. This is not medium to me. The business must have significant operations or the majority of its employees in the US. Now with the PPP, if you are not the citizen, not the PPP, with the EIDL, one of the requirement was you have to be the citizen of the US or a green card holder. And if you're not, you were denied for the EIDL loan. But with this one, it does not require it. It only says that your significant operations has to be in the US or the majority of its employees in the US. So you can have some employees working outside the US as well. I'm going to come back to the questions. I know a lot of questions are coming up on the EIDL. I'm sorry, Main Street Lending Program. If you can post all the questions into the Q&A, that would be very helpful for me to cover all the questions in one go. The next one is, these loans are issued by lenders and are not forgivable. The loans are for a minimum of $250,000 with a maximum of $300 million. Again, it's a 5-year loan with a variable interest rate. And the principal payments will be deferred for 2 years, interest payments deferred for 1 year. Each lender will have its own loan documents and underwriting criteria. The application for this program is very, very involved. It was very easy to do the PPP and EIDL applications because those were smaller funds, but this is very involved. And I have been talking to a couple lenders. Some of them, they do require either the audited financial statements or a certified financial statements as well. So each lenders, they have their own requirements. Applicants must certify to various conditions and statements to receive the loans. There are collateral requirements to each loan, but the good thing is there is no personal guarantees required. No personal guarantee, and I think that is a good thing. Of course, no one would give you this huge loan without a collateral. Although individual lenders may have their own requirements when it comes to the personal guarantees. Main Street loans are available even if the business already has an EIDL or PPP loan. The program will continue through at least September 30th, 2020. So if you are looking to apply for this loan, you only have time until September 30th, 2020. I'm going to go ahead and launch another poll. And I'm going to cover some questions on Main Street lending in the meantime. So do you think you are overpaying in taxes? So I have a question from Dewell Ray. We received full EIDL and PPP, but by end of this year, if we sell the hotel, do I have to pay off the EIDL? That is an interesting question. Honestly, I am not sure on that part, but I would like to do some more research on that. The whole purpose behind having the EIDL loan is to help you, survive for this hard time. But if you can substantiate somehow, your business suffered, and because of that you're selling the business or something, I don't see any reason, as long as you pay off the EIDL money back, I don't see any reason to have an issue. Just one thing to remember, when you get the EIDL loan and you sign that acceptance offer, you are giving SBA a collateral to your business. If it is $25,000 or below loan, you are not giving any collateral. But if it is a bigger loan, you are giving collateral to the SBA on your property. So if you're planning to sell the business, my understanding is you're required to pay that loan back completely. Otherwise, SBA would not let you sell the property because they hold the collateral on your building. Taruna, if you want to take down this note from the Q&A, someone needs help with the EIDL appealing process. What do we have to elect for 24 weeks of forgiveness period? If the original loan is the 8-week period, is there a formal process? No, there is no formal process. You don't need to notify anyone. You don't need to do anything. If you're going with the 24 weeks, when you approach towards the end of 24 weeks or when 24 weeks are done, you can, reach out to your lender and, fill out all the forgiveness application process and everything. Just go from there. I see that majority of the people, they don't even know if they're overpaying in taxes. Wow. And it's 55% of the people. I'm going to end this poll and share results with every one of you. Now, as you can see, 55% of people, they don't even know if they're overpaying in taxes. I'm going to cover that next time. I had a lot of slides here still, which I wanted to share, but I think we are running out of time, and I'm going to cover these questions. We are going to hold another session, and I'm going to announce a date and time again as we move along the next slides. So talking about the PPP loan, I just want to make sure as many accountants are not helping on this. And if you are the one, you got this PPP loan and you want to get this forgiven, make sure you are depositing this PPP loan money in a separate bank account because that is really important. You cannot have this PPP money as well as your revenue sitting in the same account. It will be a nightmare to request a forgiveness when you have everything sitting in the same account and you're spending money out of it. So I would be very cautious on that. If you have not opened a new bank account, just go ahead and open it and start from scratch from there, because you don't want your PPP loan money not forgiven after going through all of this headache. The next question I have is, if the business already received PPP or EIDL loan, they can reapply for the PPP loan again, correct? Absolutely correct. If you receive the PPP loan once, you cannot, apply for the PPP loan again. We have received the PPP loan in May, and we almost used this loan in 2 months. As per guidance, as per new guideline of July 40, oh, I'm sorry, as per new guideline of 60/40, so most likely we get 100% forgiveness. Now, if I apply for EIDL, I get $10,000 advance. Did I need to be returned this 10,000 grants as I have 100% forgiveness in PPP? Okay, so let me reframe this question. This is someone who has sent this question as an anonymous, and this person applied for the PPP loan in May and have almost used this loan in this 2 months. And as per the new guideline, which is 60% for payroll, 40% for any other expenses, most likely they think they would qualify for the full forgiveness. And they also received what you call the EIDL grant of $10,000, economic injury disaster grant of $10,000, and how that $10,000 is going to be treated. So it is possible to, when you get the PPP loan and the EIDL grant, your EIDL grant shifts into the PPP bucket. So if your PPP loan was $50,000, you receive $10,000 of grant, your PPP bucket is holding right now $60,000, okay? When you apply for the forgiveness, you will receive 100% forgiveness for first $50,000. $10,000, now they are still debating. Per the interim bill that has been passed, passed and approved, the way it reads is $10,000 you will have to pay back at 1% interest. But again, the things keep changing. And when this CARES Act was enacted, the original intention was that you don't have to pay back this money because this is considered as grant, not as money. And grant is something, as long as you have used towards the right purpose, you don't have to pay it back. Next question. I received my PPP loan in early May, but it was deposited in my normal business account. How should I proceed with the forgiveness? Again, I would recommend, open a new business bank account, transfer your PPP loan money. If you received $50,000 8 weeks ago, transfer the whole $50,000 into that new PPP loan account. Then based on your calculation for each payroll, rent, utility expenses, cut that check and transfer that money to the business account. That is the clean and nicest, most easiest way to explain to the lenders. The lenders, the bank officers who has given you the PPP loan, they are not the CPAs, they are not the accountants, they don't really understand anything. It will be a nightmare for them to, decide the forgiveness, whether you spend money out of your revenue account or your PPP account. I mean, when you have everything mixed up, there's no separation here. I just want to let you guys know that we do provide a free complimentary tax assessment where we look at your prior year, recent prior year tax return and find out how much you have overpaid in taxes and give you our honest opinion on where and how much you are losing money in taxes. It is completely complimentary and free, and you can click on this link and apply for schedule up a meeting with us and send the copy of your tax returns. We will be hosting another webinar on July 9th at 3 p.m. where we will be discussing a little bit more about deductions, legal entity structure, retirement, and a couple other topics as well. But when I'm doing the complimentary tax assessment, I look at all things. What are the deductions available to you and you're not taking? Are you operating under the right legal entity structure? Is it really costing you money? Your retirement options, if that is something you are looking for. If not, that's another option. Insurance, loopholes. Insurance does not mean life insurance. TCJA, all the other advanced and your industry specific strategies. Next question. Is new business owner buying in August can qualify for the Main Street loan facility? As of now, the way the loan terms are, looks like you would qualify for Main Street loan facility even though it's a new business. It does not say anywhere that it has to be an old business. Let me go ahead and launch the last polling question for today, that what kind of topic you would like us to cover in the next webinar. And accordingly, I would come up with a presentation on July 9th at 3 p.m. Based on where we get the highest votes. So while I attend to the next question, you can take the next poll. You know what, I think I didn't launch it right. Let me relaunch it. And poll and okay, I think you guys should be able to vote now. Okay, the next question. How does employees getting unemployment affect employer in any way? That is a very good question. So if you have an employee and that employee is filing for the unemployment, at the same time you received the PPP loan, you as an employer have to send them a written notice to ask them to come back to work from so-and-so date. And I would, when I say so-and-so date, I would put in the date you received PPP money in your bank account. So when you get the PPP loan today, you have to send a letter or a written communication. Again, written communication is very important here, that, that you are required to come back to the job as of today, and you will be put on our payroll, and you have to stop taking the unemployment. If you don't do it, employee still collecting the unemployment, your PPP loan will not be forgiven. So it's a huge liability on you. If you have given the notice to the employee and employee still doesn't come to the job and still collecting the unemployment, you have no liability on it. Your PPP loan forgiveness is not affected. But the employee will be required to pay back that unemployment compensation that they receive. So any $600 per week or anything extra your employee was receiving just sitting home, they have to pay it back, unfortunately. Okay, and I think I saw one question in the chat box. If someone wants to pay the principal amount more than 15%, what is the terms? And I believe this question belongs to the Main Street Lending Program. And if you want to prepay, there is no penalty. You can prepay more than 15%. I'm going to end poll, and I'm going to share the results with all of you. Looks like 37% of people are looking more for disaster relief lending, loan and grant options, and 37% looking for PPP loan forgiveness, as well as a Main Street Lending Program. So we got pretty good tie here, 37, 37, 37, and 32% looking for tax planning, and 32 for best legal entity structure to have. So I'm going to, come up with the next webinar on July 9th, covering my presentation around this ideas. And thank you everyone for joining. And don't forget to register for our next webinar, which is coming in on July 9th at 3 p.m. The link is not active yet, but it will be posted on our Facebook group, as well as whoever participated in today's webinar, we will be emailing it to you. And I know we covered a lot of information, and I hope it was informative. Stay well, stay safe, and be strong. Thank you, everyone. And bye.